Real quick before I start this video, I have a huge announcement to make. Between now and January 1st of next year, if you are liking, commenting, and are subscribed to my channel, and the channel reaches 10,000 subscribers, I will take 10 of you for a 10-week free mentorship. This mentorship will include pre-market analysis, post-market analysis, a weekly review, and my daily assistance with your trading journey. I know this is a very ambitious goal, but with your help, I think it is achievable. All of that being said, welcome to Pips to Profit. My name is Cameron, and today's video is going to be about first red days and how you can avoid false signals. Getting into this first red day presentation, I am going to let you all know that in my first green day presentation, I really did not go over what would invalidate either a first green day or a first red day. So I'm going to go over in this not only the characteristics, some examples, etc., but I want to let you all know how do I invalidate a signal and what to look for so that I'm not trading in the wrong direction on these signal days. Starting out, the characteristics of a first red day first. Basically a first green day flipped over. We need multiple days unidirectional in the upwards direction. Preferably, okay? That gives us a strong 2 to 3 days of pump. Good stuff. Day that closes under the open, a red day. So if you have 2 to 3 days or one really strong day of pump, and then the following day trades higher and then trades back down and closes below the open, that is an ideal first red day. Day 1 or day 2 of the 3-day cycle. So like I just said, if we have a breakout that fails and comes back inside and closes a red day, that is an ideal first red day. That would give us day 1 of the 3-day cycle. And then the following day would be day 2, which is a lot of times a trend day. And that would be the day that we would look to take a high of day sell or a high of session sell, depending on how the market is set up. So the first example, this is on British pound, Australian dollar. And over here on Thursday, I'll move my face so everybody can see that I'm not blocking anything important. I have my pump day annotated right here. And then the following day, we have another pump. They trade higher, and then it comes back down and closes underneath the open. My process for this is I just draw my end of day consolidation. That is the last swing high and the last swing low of the New York session. And you'll notice that a lot of times we trade within those levels before either breaking out and going higher or breaking down, breakout, pullback, continuation. And the first part about that, where I said that break out and go higher, I'm going to show you why that's important. All right, on this example, you see, similarly to the last one, 2 days of pump, boom, boom. And on this day, we have a first red day. They've traded up and then come back down and closed below the open, okay? Just draw my end of day consolidation, breakout, pullback, 1, 2, 3, and it breaks down instead of going back up, showing immediate weakness in the market. This gives us a London, I know that's spelled wrong, London sell high of session and a New York low-hanging fruit trend continuation. This right here was the London sell, and this down here was the New York trend continuation. This was a pump and dump style of trade. Again, strong pumping day. This is gold, by the way, on the 15-minute chart. A strong pumping day that's traded higher and then come back down and closed below the open, giving us day 1 of the 3-day cycle and first red day. Same process, just draw that end of day consolidation. This is a smaller rectangle within a larger rectangle, and then they break out, pull back, and continue just like the other examples, showing immediate weakness and continuing on down through the remainder of the day, which is exactly how a first red day, day 2 in the 3-day cycle should act. Again, strong pump day, a day that's traded higher first and the breakout has failed and closed below the open, giving us our first red day. This is the US dollar, Canadian dollar on the 15-minute chart. Trap volume at the high of the week, like I just said, day 1, 3-day cycle. Same process. You can use that high there or this pen up here. I use the pen, obviously, in this example. That's where it reacted the best off of. But if you did use this swing high, You can notice that there's one push, two pushes, and a third push out of that consolidation before the false break back down, not only through the low of the day, but a range expansion of that entire day through, all session fade style of trade. This was a 3-session buildup, and this is exactly what you want to see for a superior, high tier, 5-star, 3-star, whatever you want to call it, kind of trade. I would consider this almost perfect. Then we have a pump day, day 1, 3-day cycle, day 2, 3-day cycle, which turns into an inside day. Why is this day 1? It's because we had a breakout on this Friday. This is the high of the week, and it's reversed on the following day, this Monday. Okay, so the breakouts failed. Day 1, 3-day cycle. Day 2, 3-day cycle, often trend day. It was good stuff. Additionally, this gave us a first red day. That's a sell high of the day opportunity. And notice I've annotated peak low, peak high, consolidation. First mouse gets triggered in, and they pump it back up to previous day's high. All right, and then there's false break and the continuation back down. This is a London high of session and I know it says NT. If I could type, that would be phenomenal, but apparently I can't. New York continuation from the high of the session back through. Okay, all right, so that's what a good first red day should look like. Now, I'm going to get into some things that can invalidate not only the first red day, but also the first green day signals if you were to just flip it over. And one of my first things that just some rules that I need to put out there. If you haven't seen my Monday trading video, it's about 3 videos back. It's a really, interesting subject because a lot of people can get caught on Mondays trading in the wrong places. And I'm going to tell you why. Day 1 runners. The previous week's high and low is very important, especially depending on what week you're in the 3-week cycle, how many weeks of breakouts there are, and if there is a strong unidirectional move on a Monday, there's a good chance that they are reaching for one end or the other of that, that liquidity pool. So on Monday, if we have not taken out one of those levels, I'm either trading in the direction of the strong unidirectional move or I'm not trading. And that's all there is to it. Monday, that is not taken out previous week's high, is making a strong unidirectional move. That's okay. Invalidating signals. Yep, got it. Traps volume under a high from 2 days ago or, 2 weeks from 2 weeks ago and continues higher. And I'm going to show you exactly what I'm talking about soon. This is this slide right here, and I just wanted the words up here so I could kind of go through what I'm talking about. Previous week's high is this pen right here, okay? This is gold, by the way. This is from today, Monday. This is Friday's low, and then this red line down here is Thursday's low. And notice that we have now immediately traded down through Friday's low, down through Thursday's low, and reversed. This consolidation right here is the New York session. So we're in level 2 consolidation at this point, which means probably need to get to level 3. Additionally, they have not taken out the previous week's high at this point right here. That means they're consolidating under a level, under the previous week's high. The only way I can go is up unless I just don't trade at all. Okay, I didn't trade gold today, but I did trade GU, which was very similar. Notice the trap volume under levels, and they pulled away. Some considerations for trading, not only on Mondays, but just the first red days in general, okay? What day of the week is it? Because I just mentioned some of the Monday rules, right? Is there news on the calendar today? There was news at 10 o'clock Eastern time. Is it NFP week? Yes, it is. So, could the whole week be setting up for NFP? Non-farm payrolls. Has previous week's high or low been taken? Remember in this, I said they're consolidating under a level. It hadn't been taken out yet. What is the current weekly cycle? Week 1, week 2, week 3 of the 3-week cycle. And then how many weeks of breakouts are in the market? So I'm going to show you, I don't have any videos on this yet, so maybe you don't understand what I'm talking about. On this example, low of the month, we have a breakout that fails at the previous week's low. Just like the 3-day cycle, this becomes week 1. We break the previous week's high right here. Week 2, week 3. Doesn't reverse. Restart the weekly cycle. Week 1, we traded higher. Week 2, now we're on week 3 of the 3-week cycle. This is the British pound, US dollar, okay? Notice how on week 2, it traded back down underneath, okay? And this is now the first week of a new month. So that being said as well, if the previous month's high and low hasn't been taken out on the first day of the month, something to think about. Traded down underneath this level and now reversed strongly and went right back up above the previous week's high. This high was from this week back over here. So that could be trap volume, again, underneath of a level. And you can see they went up and did not quite make it to the previous week's high. Okay, now let's look at an example of a first red day that played out correctly so you can see the difference. Let me go back to the 15-minute chart. This is the British pound Australian dollar. And we have a market that, similarly to the other one, has done the exact same thing. Breakouts failed, day 1 3-day cycle, closed below the open. Good stuff. We even got a little pump day over here. So that gives us space under here for the market to maybe fall through. Same process. Let's go through and put our last high of the New York session and last low. Breakout, pullback, continuation. Notice the difference between a market that immediately breaks out and then the breakout fails and now we're in a strong move in the other direction, and you don't want to get caught trying to counter trend something like that. Whereas this, we have breakout, pullback, continuation at the appropriate times of the day. We breakout, pullback, London session. Okay, so now we've got lower highs, lower lows, and it just continues to fade throughout the day. And then just really quick, let's go through and look at the GU example. And this is exactly what I'm talking about. Okay, remember some of the things that I had said. What is the characteristics of a first red day? We have our pump day right here. Good stuff. We have a day that is traded higher and then closed back underneath the low. Okay, so that gives us day 1 of the 3-day cycle. Then we have our end of day consolidation. We have our low and high right there. Showed immediate weakness. Okay, that's fine. What's not good is how it traded through these levels, okay, and the time that everything is occurring. All of this is happening very early in the day, in the trading day. Not to mention, once they come down and they've gone into consolidation at the low of the day / it's Monday, so low of the week. Notice the pin hammer, an explosive move back up out of consolidation. Okay, what in the world does that tell me? Well, just like I had shown on the example, once they come back up above here, if you went short anywhere in here, you're stuck. This becomes a strong unidirectional move back towards the previous week's high. All of that is fine and dandy. How do you, benefit from that knowledge? Let's look at times that things occurred, because we have a high from that pin, and then we have this low right here, which really isn't a very good low. There's not even really a pin, but I'm going to draw it on there. And that low is only important because of the time, 8 o'clock. This is the 8 o'clock open, pre-market open. Let's take a look at how that's traded. Candle opens, they trade through it, and they stay on top of it. Boom, boom, boom. They're pinning down into the low. Let's go back to the 1-minute chart real quick and take a look at some of the price action factors that I was taking into consideration on this trade. So think about my entry criteria, and I'll put that up on the screen as well. I need a high or low formed. Boom. There it is. High or low formed. All right. Well, I've got the low of 8 o'clock down here. And I also have this higher low, which is just suspiciously suspended, right? Now, look at price action here. 3 hits to the low. 1, 2, higher high, 3. This higher high break in structure is a pretty good confirmation we're going up. On top of that, okay, so we've got 3 hits to the low. I need to see some kind of chart pattern, and I need time engulfments, and I need an engulfing candle in the direction of my trade. So let's take a look at, there's 9:30. This black candle is the first candle of 9:30. 1, sideways. 2, sideways. 3. And an engulfment. Here's another example where the first red day, if you were considering trading this, we did have a pump, and it retraced almost the entire pump. And coming Monday, you know, if you were coming to the screen and you wanted to trade this, got your last low and last high. Okay. Boom and boom. All right, breakout, pullback. Maybe you try to trade the continuation. Time's not really right. Okay. Just look at the price action. Breakout, pullback, tried to continue, and has failed. It's failing. It's not going anywhere. It's in consolidation. It's not going anywhere. And instead of going down, it goes back up. What time is that? 2, coming right into the London session, takes off and goes back the other way. So, you know, how do I invalidate this? Well, you've got trap volume at the low of the current week, and it's Monday. Where are they going? You know, what's the first place that they could go? Well, they just triggered people in down here. Where's their stops going to be? First place is probably the high of the last session. This is the high of New York. Next place would be high of the previous day. And that was the high of last week as well. Okay, so this was essentially just them dumping and pumping. So something to think about. Trap volume, shift the market, get people trading in the wrong direction before shifting. Once they've started shifting in the other direction and you catch it, especially on a Monday when a previous week's level has not been broken, that invalidates any idea of first red day or first green day, depending on, you know, how things are set up. Make sure you're trading and looking at these end of day consolidations and taking into consideration the market only does the 3 things: breakout and trend, breakout and reverse, or stay in a trading range. I really hope this has helped everybody. If it has, do me a favor. Like I said, beginning of the video, subscribe, like the video, comment. It could be sandwich. I don't care. Just put something in the comments. You'll have a wonderful day.